As we look ahead to this week, and expectations in the market are pretty high for the vote to get passed in some way. And yesterday, I was reading calls coming out that would take cable, Goldman, for example, saying to 135, some targeting even higher in the medium term. Could we get that high by the end of the week if this vote is passed? Because you put cable fair value at around 132.
Yeah. The way I like to think about it is really take a step back from the politics and we concentrate on the macro fundamentals. And then we derive from that where should cable be trading in a world where we don't have these Brexit scenarios. And that gives us a fair value of this 133. If you're a sterling, that's 0.88. So that's telling us that you've already had a lot of the risk premium taken out. You're also starting to see with our positioning metrics that the market has kind of re-entered long sterling positions. Those positions aren't yet extreme, but if they were to become extreme, that would be a sign that maybe cable is starting to top out. So we think there could be a bit more upside to cable, but we think we see most of the move as that risk premium has been removed.
Got it. So a move, say, to 140 is actually not that likely, even if the deal does get passed and it's plain sailing from there?
No, we think it's low 130s. Where there's a bit more room, however, we think is in UK equities. FTSE 100 seems to be lagging the rise you've had in global equities. So we think there's more room for FTSE 100 to catch up. And also in credit. Credit, there still seems to be a reasonably sizable risk premium priced in. So we think that the credit market's pricing in about a 20-25% probability still of a no-deal Brexit. So that shows you there's still room for UK credit spreads to tighten.
Yeah, and it's interesting that you bring up the FTSE 100 because the FTSE 250 is the one that's kind of moved most, and those small and mid-cap stocks have moved most on the prospect of a deal being passed. So has that move been overdone up to here? Would you think there's actually better opportunities in the FTSE 100, even with the strength in sterling?
Yeah, so the 250, it's rallied a lot.
Yeah.
The FTSE 100, one of the reasons we see a better opportunity there is that it's lagged because of this impact of sterling. Because we think sterling is starting to reach a ceiling, then that means the negative impact from sterling we think is going to be minimal going forward, giving chance for the FTSE 100 to rise further.
Right, and you mentioned credit as well. What about gilt yields?
So gilt yields, so we've seen with gilt yields that they've come back in line with their kind of fair value since the first time this whole year. Now, part of that is because you've had the rise in gilt yields, but a lot of it is also due to the fact that the fair value for gilt yields has declined off the fact that growth has slowed. So actually, we think overall gilt yields, they're trading about where they should be, even without political risks being taken into consideration.
And translate this over as well into European assets, because I ask people all the time, look, does this mean that European equities are going to get a lift? I mean, what parts of the European market do you see as most sensitive to this Brexit process and therefore most likely to catch a bid if this all ends well?
Yeah. So for European stocks, you know, the story hasn't really been about Brexit.
Yeah.
You know, there's been that implicit risk premium priced into the market, but we think that's unwound. You've had particularly European banks. They've had a huge rally over the past month. So we think that going forward, it's really going to be much more about the European growth story, the ECB, and also the US-European trade talks that could potentially be coming up.
Is European high yield one area, though, that might be poised to benefit?
Yeah, it could be. Yeah, I mean that's one where there's been a lot of focus. You know, you've seen off the back of that as sterling assets have recovered and that risk premium has come out. You're seeing that come out of high yield, and there could be a bit more room for that to continue.